Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, everybody. Welcome back. Another week. To me, it's another quiet week. Not much have happened on the stock market as far as I'm concerned. The Dow Jones is still struggling on the 20-day moving average, and then S&P 500 is going sideways as usual, except Nasdaq is continuing making new highway. And of course, we have 4th of July weekend, so everybody, Americans listening here, happy 4th of July Independence Day. But as far as I'm concerned, yeah, the market is a bit dull. Well, it's making its headway, continue to do so. But I said last week, I've been doing some review anyway. So today, I just going to give you some updates of some of the review I've done. So last week, I already talked a bit more about what I think. Basically, you cannot really miss one trade. Sometimes if you miss something, then hopefully it might make or break your month, maybe even your years. So yes, the March downturn is really significant and really quite scary. But if you caught basically change when your system tells you to change side, then you have recovered. And also back in end of March, when everybody's really panicking, it really is time for recovery. And then when you have bought into it, well, you have a slowly 2.5 months recovery, and you have if you have money left, that is, and make a lot of money back. One thing though, for the last 6 months, one things have been quite interesting. I think it's probably 3 months. Is that since the lockdown, people have a lot more money. I mean, people who are on low employment, doesn't make too much money out of their paycheck, and also those students and everybody else have free hands on their with themselves. Basically, download apps and this Robinhood apps. Lots of people just gone into it and just start trading. So while they are receiving money from the government, it might be a bit delayed, but at least everybody get a bit of money. And the government, America, seems to continue for a few more months yet. So people have free time on their hands. They couldn't go out. They only buy so many things online, food wise. And then a lot of those people who got those paycheck are doing two things, funny enough. One is using this Robinhood app, or basically go on the internet and just try to be day trade. And secondly is people who don't go to trade. Basically, what they've done is they put the money back into the bank. So saving rate in America seems to have gone up. But most noteworthy is basically is this Robinhood thing. I mean, most newcomers onto the stock market are basically the young generation. They don't have much money, a couple $1,000 here and there, mostly from the lockdown payment from the government, and basically the people, rather than because they have nowhere to go, and basically they just go online, try to have a fruit, so to speak. It's been like a lottery to them, and because there's so many people actually doing it, and one of the things that's been discussed about the last couple of months is the effect of the Robinhood traders on the stock market. So this mass amount of small retail investors going into the market and basically push the market up. So many onto Nasdaq, I think, many all because a lot of those young kids, new kid on the block, so to speak, and they're more into technology shares and stuff, and also the COVID-19 vaccine as well, those kind of stuff. But in general, there's a lot more people doing day trading and trying to make some money that way. So yeah, it's quite surprising what happened. The lockdown have actually produced some unexpected results, so to speak. But something that never changes is still even before lockdown is the U.S. to China relationship. Now the Chinese have passed basically the new security law, and of course the U.S. and U.K. say a lot of things and so forth. But overall, America have removed the Hong Kong special status, whatever trade status, whatever it is, and then the UK government thinking about, I think the Prime Minister actually said allowed up to 3 million people to come into to UK because um, China didn't honor the one system, one country, two system thing. But I think that that's just a lot of BS to me because I mean back in '97, they never even allowed so many people to stay in UK. They only give people have a certain amount of people to have the BNO passport. Um, and effectively, yes, they prepared up to 3 million people to come to the UK. But did anybody go into UK from Hong Kong? No, not really. But only the Hong Kong people who is eligible. Mostly are have money or well educated, and a lot of it are businessmen as well. They're having that extra passport, so to speak, to basically have a safety net to go to UK. But it's not. But that passport doesn't give the BNO holder to stay in UK indefinitely. It's only a travel document to say you don't need a visa to visit UK and stay there for 6 months, but you're still not allowed to work and all sorts of stuff. So the Prime Minister Boris Johnson in UK basically say, they extend that to up to 5 years, that kind of thing, so the people can, if they take it up, can stay in UK and then apply citizenship and so forth. But remember, one of the reasons why we get out of UK, get out of Euro, is try to have a better border, so we said what type of people coming into UK. Now, when we was in Houston, in EU, in a part of Europe, a lot of when the Eastern Bloc countries joined EU, basically a lot of Polish, Romanians, and Bulgarians, yes, they did. They moved to the west, so Germany, France, UK, and see a lot of influx of people. And one of the main fights that the independent party, and then try to those people who want to get out of Europe. Basically, one of the main things they're saying is have a more secure border, have more monitoring, have the right to say how many people come from another country can come into Europe. Now, suddenly, UK Prime Minister Boris Johnson said you allow up to 3 million people coming into UK. So, you sure? I mean, 3 million Hong Kong Chinese. I mean, they're probably quite selective, Initially, I was thinking I think it's like 300,000 people who are eligible, but plus their family, so wife and 2 children. So that's up to 3 million or something like that. But those kind of people, remember, newer generation, the youngsters, quite a lot of it is involved into, some of them, mostly I believe, peaceful protests, but a lot of them is also into not very peaceful protests. Would they like those rioters to come to UK and actually do, to demonstrate and follow what they have done in Hong Kong and put it into UK? How would they feel? How would the British government feel about that? Let's go into local government, burn things down, go into underground train station and burn the entrance, destroy things, destroy machines and stuff. Very much like hooligans. The British football hooliganism. Would they want to impose some of that from Hong Kong? I don't know. I really don't know how the UK is going to do this. And also, this really, the UK, if they actually make this happen, it's going to seriously damage the relationship with China. Remember, China, not Huawei aside, already have quite a lot of students coming into UK to study, apart from US. And if UK also try to act a bit funny, so to speak, China is just going to do what China did to Australia. Basically, just say, okay, you one way or another make some excuse to say UK is not safe, or make it difficult for travel visas or student visas to come over, that kind of thing. And also Huawei, they may say, okay, fine, you might not deploy so much 5G technology over here. And I think overall, when then UK and US as well try to go into China, they just say, well, you don't like us, so to speak, think 5G is full of holes and stuff, and say these things that doesn't, what you call, the Chinese government doesn't like to do, because of the security law in Hong Kong, and then UK allows so many people come into to from Hong Kong to UK. Then China basically say, well, if that's the case, mentoring from our own internal policies and stuff, they might basically just limit the number of students coming over, limit traveling, limit even buying UK stuff. And so I don't know how that may work out, So instead of US and China relationship, this security law basically put UK in the middle of it as well. And the coronavirus, Australia, we put a foot in. And so China is already flexing muscle on that one, and also Canada due to Huawei issue. And basically, Canada is the worst one out of all. I think that the least, the what you call the one that is affected the most with basically just follow international law and didn't really do anything to China really, just because following whatever the international say, honor the agreement with US and just hold Huawei executive there, and just basically got China's really angry about it, and basically China fight back by not importing a lot of Canadian food, and also accuse some Canadians actually sabotaging the China government or spying, whatever it is in China, and then hold two Canadian citizens up. So this relationship kind of thing, international between two countries, it seems to be getting worse and worse. But that's on the surface, though. The funny thing is the last month or so, if you track the Hong Kong index and the volumes and stuff, even though security law has been passed, and first of all it's been threatened, about security law being passed, and naturally with the law now being passed, the initial Hong Kong index gone down quite a bit, being about 1,500 points, and then there's quite a bit of fluctuations. But then the loss has been recovered now last week or so, last 2 weeks or so, and then there's a lot more money going into the Hong Kong market. Meaning basically the volume has gone up. Now, who is actually going in there? I personally feel it's not just a local from Hong Kong or so to speak. Or even in Asia, but it's a lot of, I think it's the Western world, especially US, try to go into China to take part in buying shares up there, because overall when the coronavirus lockdown is hurting a lot of countries, and also especially in US it's not really locked down at all. Some states doing the other states are not, with the coronavirus still sort of sky high, and UK and Europe are struggling trying to recover from the coronavirus problem. The East down seems to be helping, but then the spread of coronavirus coming back again, so it's causing issue. So they are worried also with the recovery so much. The last 3 months or so have gone up, V-shape more or less in the US indices, and they think maybe a bit too high, and try to go into Hong Kong having recovered as much, and possibly also China as well. So I think the reason the Hong Kong index gone up quite a lot volume wise in the last 2 weeks is mainly because I think extra money actually going into China. So people are not particularly worried that this security law has been passed, and then what might that means to the Hong Kong index. So that seems to be continuing. So that's one thing. The other thing, obviously, like I said, that the ease of lockdown in Europe now, and also in US. But we have seen how people reacted. We just have yesterday. Basically the easing lockdown continue, and people start to go allowed to go to pub, and people forgot about social distancing, and got a bit pissed, drinking a bit, very happy to see the friends again in pubs and so forth. But then when you are slightly drunk, you most likely try to hug each other and stuff, and how you keep distance with each other is a bit difficult, and we've seen it in basically in beaches and stuff, both in Europe as well as in US. I just wonder how this easing of lockdown is going to help anything really. It obviously helped the food industries and travel a little bit, allowed to do that between different states and countries in Europe. But the coronavirus hasn't gone yet. So I just wondering what might that be. And one thing definitely though is that there's a change of way how we ordering things. So we buy a lot more stuff online on Amazon and stuff, but also food deliver as well. So we do a lot more takeaways, and we even buy our groceries online a lot more. In Europe anyway. I'm not sure about in US, but basically, I think overall people in the West have changed their habits quite a bit. So buying a lot more things online seems to be more uh, reasonable and a lot more popular, so to speak. So that's one thing though, and that what does that mean? That means people have to queue up to go and get food and stuff, and even get a haircut and things. But so part of it will people will still continue to go to shop, but a lot more people go online. So like for example, for the food industry, people order take out a bit more because of the coronavirus, social distancing and stuff. Most in restaurants and hotels anyway couldn't go into full capacity. So especially for those one is only making, especially the food industry, making maybe 20 to 30% of margins or something if they're lucky. But that depends on the whole hotel, or the food restaurant is actually open with only 50% capacity. I just wonder how many of them can actually continue the business, in the coming months. Only time will tell, and this is causes quite a bit of problem with the banks as well. On that side, like okay, in UK you have like mortgage payment holiday. I'm sure they have something similar in other places around the world, but we start to see a lot of rents being payment being missed. These are rental payment for like shop fronts and stuff. They just couldn't pay, and that's put pressure on banks directly or indirectly. And some U.S. banks already having failed some stress tests, so it's in Europe as well, I believe, and that basically put more stress on the banking industry itself. So I just wonder what will happen in the next 6 months. I think probably we see a lot more of that, especially people start coming back to work. The easing, the lockdown slowly coming back. So people slowly coming back out and so forth. But then the government can only give so much furlough money, so to speak, and to keep employee from being fired, so to speak. And then, if the businesses are not making enough money, how many people can they actually keep in employment? So I think over the next 6 months we probably see a lot more, probably a spike like what happened in US. People start initially March and stuff. Got a lot of being laid off, and then people start getting shops and hotels and industry start to opening up again, so they will employ some of those people. But then overall, I don't believe it will be like full employment back to before coronavirus. Probably if you're lucky, maybe back up like 50% or something. So that means put a lot of pressure on on banks and stuff, and hotels and shops. I believe this will be quite a lot more things to come yet. And of course, that with the easing of the lockdown, of course, the oil moved up again, and because people start to drive a lot more. So in Europe, people are able to travel locally, so to speak, and international flight but stay within Europe. But the larger things like from US to Europe to US to Asia to China, that kind of things. I mean, if you look at Singapore, there's news on it in Asia. A lot of hotels are suffering because a lot of international traveling is not allowed yet, and Singapore is relying quite a lot also on sightseeing, international trades, as well as gambling as well, the Sentosa Island, so to speak. So it's a bit of struggle for Singapore anyway. So overall, you actually see those kind of things happening around the world. But yes, the oil have gone back up. All these people talking about 3 months ago say gone to -100. probably go out the window. But like I said before, I totally see this as an oil manipulation by CME in America. Suddenly allowed oil, the WTI, the U.S. crude, to go negative, and then basically the big boys in the oil industry, in the oil market, just basically play it up to the full, and then a lot of people on the retail investors, with many who basically gone into the oil ETFs, thinking the oil couldn't go so low, actually gone in negative. Got a lot of them got burnt, and that is very unfortunate. But it shows how manipulated the market can be, even though the West supposed to be open and fully discretion, basically showing the rules and the fair rule of play. But things can just change. You say China, for example, manipulate the market or something, not fully open the market, not letting the yen, the yuan to fluctuate and so forth. But look at the oil industry, WTI, suddenly just change the rule, change the game plan, and what you can do, and then just lots of people lose money. Everywhere is similar as far as I'm concerned. So as far as trading is concerned, be prepared for the unexpected, which is sort of happening. But the other things that's also happened is, of course, around the world, the central banks, especially U.S. Feds, are pumping loads of money into the financial system, and we see the V-shaped recovery in a lot of indices around the world. But that also means that there's a lot more U.S. dollars that's gone in. Now, remember back in 2007, 2008, the U.S. Fed pumped loads of money into it. So the Fed balance sheet was like, a trillion or 2 trillion kind of thing, and suddenly gone to like 4 or 5 trillions. And then obviously 2 years or so ago, over the last 2-3 years, the Feds try to slowly easing, not letting so much money go into the market, and try to quantitative tightening, and the stock market tank a bit. But it's more or less stay around the 4.5 trillion level. But look at the last from March to June kind of thing. It gone up from about just under 4 trillion, and then gone back up to now 7.3 trillion. And then it's like for for 10 years, from 2008, and the American Feds have pumped loads of money into the market up to 2018, so to speak. It took them like 10 years to like go from 1 or 2 trillion to like 4.5 trillion. Now, but only this time round, for the U.S. Feds to pump the money into the market, go from about 4.5, just under 4 trillion, to 7.3 trillion or so in the space of 3 months. So I just wonder how the US dollar is going to hold up. I mean, short term wise, seems to like continuing staying around the $75, 97.5 level on the US dollar index. So that's fluctuating back and forth, but it's still up there quite high. But when the US dollar is weakening, we will see, like, especially like I said before, the Australian dollar against US dollar, and you've seen the recovery gone up so much. I mean, the Canadian dollars against US dollar as well, have strengthened. So we just have to wait and see. With so much money flying around, that's one of the side effect that we see, because so much money coming in. The money had to go somewhere. It's generally gone into the stock market, and the stock market, and basically comply and basically gone up quite a lot. But all you also see is, if you actually look at the U.S. Fed's balance sheet, so quite some funny things happening. Since early June, the increase in Fed's balance sheet seems to slow down and reduces. So yes, the Fed is pumping money into the stock market in US, but it seems to be slowing from early June, and this is more or less similar time when the Dow Jones is struggling to stay back above 200 days moving average and gone sideways, and S&P 500 gone sideways as well. Yes, it's above 200-day moving average, but it's gone sideways, except NASDAQ just continue moving up. But it sort of show up that the slowing of Fed's pumping money into the market is showing up in Dow Jones and S&P 500. So if this market should continue to go new high, it will have to have the Feds have to put more money in, and that's putting even more pressure on U.S. dollars. So I mean, the Feds is not silly. They will do whatever they can to try to help the U.S. dollar as well as the stock market. But how much they can do is questionable. I mean, another black swan comes in. What do? Put more money into the stock market, which is the norm. But then that put even more pressure on U.S. dollars, and it will be one day, it may gone into 10 trillion or something on U.S. balance sheet, and I will not be surprised. But then, what does that mean to other currencies and so forth is definitely something to watch out for the next 6 months or so, and then that of course put pressure on help gold to move up a lot. But I'm quite struggling to see why it's only stay at 1800 or there about 1750s 1800 level. Or 1820, and don't break above. I expect it to break above the all-time high 1960 or something, back in 2011, that kind of time. But it hasn't. So we just have to wait and see how far it will come. But I sort of expect that this year, next year, doing that anyway, just because there's just too much dollar running around. Next is basically, because of the traveling and lockdown, I just really see a lot of hotels and, the Airbnb, those kind of things having problems. I mean, hotels, just like the cinemas, they're not really open, probably have half capacity even if they're opening. Hotels going to get hurt. International traveling, unless it start to coming back, in earnest, so each country probably only supporting its own local within the country travel kind of things, and those hotels basically there's just too much rooms available, and also the airlines couldn't support it. And what happened to Airbnb? That type of model definitely is relying on people, a lot of international traveling or even within the country traveling. And with the COVID-19 still running around, Airbnb definitely, that kind of hurt the model. But in general, any hotel-like business will get hurt, and that one I think definitely we'll see a lot of smaller hotels, smaller Airbnb owners who just basically, instead of renting a room, last 5 years or so, people instead of renting a room is buy a flat or block of flats, something just rent up entirely just for Airbnb. Those people is going to get hurt quite a bit. And the other thing, of course, the international traveling not happening. What happened to the international students with the, like I said before, the relationship with China, so bad between US and China, and also possibly UK and China as well, with that deteriorating, and China being the one that for the last 5 years or so supplying a lot of international students to, especially to US. What will happen then with this student market, international travel plus international students? I mean, China's already flexed the muscle to dare enough to actually say to its own people, students, to say don't go to Australia. Now Australia also as big as US, but or even or maybe UK. But then if China think and deemed it's time to strike back, which we have seen the last 6 months or so, be more focal and push back. The international students going into US and China and Hong Kong, in UK probably will be affected a lot, and that have indirectly consequences to food, accommodation, sightseeing, traveling, general going to buy stuff and computers and see clothing and food stuff and those kind of stuff. But I think most of all is, UK probably not as much yet, but US definitely is the universities, especially like the Harvard and things. The top university attract a lot of international students. The lockdown, the limited international travel, and also spat between US and China definitely will hurt those big MIT, Harvard kind of university, and I basically will watch them basically with interest, so to speak, and see how much money they actually make. Yes, they can go international students using online services, online courses, but for like science-based, engineering-based stuff, how much can you do online? And a lot of time you need actually face-to-face, actually do the experiments and things. I mean, students can only do so much experience through simulation, so much, but you have to do it with equipment and stuff. Students just can't do it without in a laboratory in a school environment. And I just wonder how that is going to roll out. And especially the spat between U.S. and China. I think personally, to me, I think most vulnerable sector at the moment, to me, apart from hotel and air traveling, is really the international student, the big one, the big international student, the big university in U.S. and UK, which because the way that they've been funded, they need a lot of international students make them viable. They pay themselves quite a bit of salary, and how are they going to pay if the government's not going to beef up, so to speak, give the money, and then international students are going down. They just couldn't hold on to all this extra high paying professors, as well as all the research might dry down a little bit as well, and we just have to wait and see what happens. Basically, for this is more or less like what I've done so far for my own internal review. But from most of all, I think the takeaway for the last basically 6 months is I mean, when everything is hunky-dory, you never know when the black swan comes in. I mean, COVID-19, the disease initially was more like localized in Asia, but then it happens and it hits the rest of the world, and we see how the West, especially the West, have quite a moral high ground on like very good in medicines and medical establishments and how they treat the patients and stuff. But it turns out they are woefully unprepared. They might be prepared more for terrorist attack on using a dirty bomb kind of thing. I said it before, I said it again, but they're not prepared for natural disasters like a virus. Yeah, they might point fingers to say this virus might be lab made from China, but if you believe those kind of conspiracy theory, you should also look into, the American has been, studying viruses in different combination, combining them, and they also funding those kind of research around the world as well. And China is one of them. They actually funded them. Being in China, or let's say in India, or I don't know, it's nothing against India, but just let's say Philippines as well. The standard of the labs may not be as high as in Europe as well as in US. What happened in other countries, there's possibility of a leak if it's happening in that way. But then, irrespective of the origin of the virus, basically we just show the world how willful and prepared the West are for a virus. And if that happens again with some other mutation, now this talk about pigs, got something else, swine flu pig, got some mutation that can pass on to human beings now as well. Then what happens if that happens at the same time with we already have COVID-19, two viruses come in, and then you have maybe a worse, maybe a bad flu bout coming around in winter and autumn. What happened then with COVID-19 still running around, no direct proper vaccine as well. So I think that we need to watch out what is black swan. But at the end of the day, is to me anyway, my main takeaway is stick with your system. Black swan to happens, and black swan if happens, it could basically give you lots of gaps up and down, and basically break all your stop losses, and you just have to take it and just go. And rely on your system, providing over long term it is profitable, and basically don't marry to your position. And because it's especially like end of March, early April, when everybody say everything's so bad, the stock market turn, and it's true what Warren Buffett used to say: when everybody is very happy and elated and think having good time, he's basically hold back and don't buy anything. And when at the blood on the floor and everybody's getting out, he actually bought something. So at the moment, he's still, for some reason, maybe he's got old, maybe he's lost touch or something, but Berkshire Hathaway is still holding loads of cash, loads of money. And yes, you've got a bit, Delta Airline bought into a bit wrong time, things like that. But when it's wrong, he get out. So I think the other main thing is when you're wrong, everybody can be wrong. Warren Buffett can be wrong too, if in one way or another. But overall, he kept his powder dry. When he's wrong, he get out quickly. It doesn't matter to his position. He doesn't really, care what other people say, so long as it doesn't up to scratch what his criteria is. When his rules say get out, get out. So we should learn from that as well. And all this black swan, maybe a rhino, a gray rhino. I mean the virus is not new at the time. The coronavirus. Europe have 3 months to look into what happening in Asia. They wasn't prepared then yet. In Europe, and also the other thing is when virus is about. I don't understand why people still haven't learned much from SARS yet. Back in 2003. One of the main way to spread was international travel, and virus being virus, it doesn't really care about which country you're from, color of the skin, sex or race, whatever. It doesn't really care. You just need a host, and then that host could be an American, a Chinese, Europeans, Australians, Russians, or from Brazil, people from Brazil or from UK, kind of thing. It could be anywhere. And you actually try to stop if you're not careful when virus spread and you don't have your borders up, or at least check for temperature and stuff quickly, and slow reacting, it can spread very, very quickly. So this is the type of things that I've sort of learned from the last 6 months. But we just basically wait and see with the next 6 months coming through now. Second half of the year, we probably see a lot more, people coming back out from home, going back to work. How the workplace will, recover, and is it as expected? Is it really good economy going to follow the stock market go V-shape recovery? I personally doubt it, but let's see what the economy said, and what the stock market will do then. I mean, the stock market was quite upfront, and yes, the Fed's pumped loads of money in, but now the V-shape recovery is more or less there. What's next? We just have to wait and see. Maybe, I don't know. Maybe, we have coronavirus that way. We might have a big flood. Who knows? Or another tsunami. I don't know, and might affect the world that way, and affect let's say perhaps Southeast Asia or something, or something happen in Russia. I don't know. It could be just anything that can knock the international trade or something, and then the stock plummeted, and then you need to be stick to your rule, and your rules say change side and change. Don't marry that, and learn from it, and also do this time we feel is good to learn from what you can see the last 6 months, and then and then bring these lessons along with you when you go to next 6 months or next year, whatever, and then learn from that to basically be careful when you are in the stock market. Anything could happen, random event to happen. So watch your downside. Your risk management is important. And I'll say it again: don't marry the position. If your system say go, change direction, then change direction. If you're wrong, you can get back in the market again. Doesn't matter, but at least you keep the powder dry, have money to trade. The other thing is a lot of people got hurt quite badly in March, and lost lots of money, and they went out and jumped out at the same time when the market is recovering. If you don't have any money when the market is starting to recover, you can take part in the recovery, and therefore your losses become basically worse, and you cannot recover. And that's one of the other takeaway I've got from the past 6 months as well. So also keep some money on the side. Don't put if you got £10,000, don't put all £10,000 in the market, and maybe 5,000, but at least you got another 5,000 in the back, that if there's some good position or situation happen, you can put more money into the market. Okay, so basically that is something I would like to say so far. So this is the end of my podcast, and next is the update on my other portfolio, and coming up next. Okay, first off the bat is Apple, and not much changes since last week as well. It's basically short term, medium term, long terms all buy. So for this one, it's very much similar to Nasdaq. It's just continue moving forward. And after that is Amazon. similar to seems as Apple, it just continue to be buy for short term, medium term, long term as well. So both Apple and Amazon are buy in all my three systems. But it just sort of reflects how the Nasdaq is actually defining things when these two big biggies, Apple, Amazon, in the Nasdaq index, and just going up and up. So it's defining the gloom and doom in the economy. So I suppose that's what the market's supposed to do, looking for 6 months ahead. But it is quite amazing just tracking these two. You can basically reflect what is actually going on with the Nasdaq. Next is Australian dollar against US dollar. It's just same as last week. We quite a few weeks already, months. Short term, medium term, long term is a buy. So this one continued to basically recover since March for the Australian dollar against USD. It's just basically showing how the US dollar basically over that period of time since March, April time, when the Fed just basically pump money into the market, and it causes other currencies to basically increase in value, and so Australian dollar has been quite strong. So basically, it takes more US dollar to buy Australian dollar, so to speak. And this is a theme that's also to watch out for. Just discontinue. It's boring because every month it seems to be doing just up. It's gone sideways for the last month or 3 weeks or so, but it's still in uptrend. So we'll just have to wait and see what happens to the US dollar. Next is Brent crude. Medium term, short term is a buy, medium term is a buy, long term is neutral. For WTI, US crude, short term is a buy, medium term is neutral, long term is also neutral. So crude in general is haven't moved much. It's just again the short term is going forward, moving up slightly. Medium term wise is sort of slowly going up, but long term is still underneath under black cloud, so to speak. It's not too surprising basically with the economy doing this way. Maybe under easing lockdown around the world, but trade is slowly coming back. It will take some time to recruit, and also the trade tension between U.S. and China has been there even before the coronavirus, and it's also going to be continue. Also the embargo on Iran and Venezuela, those kind of thing, is just playing into the market. So we just have to wait and see what happens next. Okay, the next coming up is DAX, the German index. Short term now is changed from a sell last week to a buy this week. Medium term still a buy, and because of this change of last week trend, long term is also a buy as well. So for for DAX in Germany, short term is a buy, medium term is a buy, long term is a buy. Dow Jones, short term is still a sell. For all these hoo-ha with other indices in US seems to be, Nasdaq in particular, just going up. Dow Jones really seems to have been problem breaking the 26,200 marks, which is just around the 200-day moving average. And so short term wise, it still remains sell. Neutral for medium term, neutral for long term. So basically, if the market, to the general key markets in US to move upwards, it has to break the 20-day moving average. But what is actually seeing here is making more sense to me basically, because the real economy is not doing well. There's just too much money into the market around the world. US in particular, with the Fed pumping so much money into the market, and so the general indices and shares, and especially the technology shares, just gone through the roof. But unfortunately, market is a market. It also weighs into the economy, and it seems to having this difficulties to find evidence to break above the 20-day moving average and just gone sideways. So just wait and see. Next is FTSE in UK. Short term is still a sell, medium term is a buy, and long term is neutral. No change from last week. Gold, short term now is a buy because last week have been a surge. Medium term is still neutral. Long term is a buy. So the other thing about gold and silver, silver I understand, but gold, thought when when the upturn from the stock market, after March, April time, when the upturn happens around the world in the stock market and stocks and stuff off, you're expecting the gold will basically go down, but it didn't. It just hover around the 1700 mark, and now almost I think it broke 1800 last week and then come back down again. So it's hovering just underneath 1800 mark. So for gold this year, if you have bought some gold early in the year, you will have make about 20-30% so far. So which is very good. I mean, but unfortunately, not all the gold shares the same. But on gold issue, on gold commodity itself, it's been a blessing, so to speak. But it is market is just showing things. It's quite weird. So I wonder what is actually holding gold down at the moment. But it is not. It's not moving as high as one would expect. But it is still going up. So stay in there. Next is Hang Seng in Hong Kong. Hong Kong index. Short term is a buy. Continue buy since last week. Medium term now is also a buy. Long term is still neutral. So it looks like, this Chinese security law, however, the market doesn't like it in Hong Kong. When it first sort of announced, it gone down like 1,000 points or something in a day and then slowly recovered. So it's doing its own thing. It doesn't really care what the U.S. market is doing, and it have its own local problem. But people initially were fearful of the security law. I think overall, what the market actually seeing is the security law comes in. However much you like or dislike that law, the market see possibly market improvement in the sentiment and the general economy basically, because you have a law that calm down on a lot of person I call rioting. There's no freedom fighters there. If people going around marching and then breaking things, just like America when George Floyd got killed, a lot of people marching peacefully, but in the evening a lot of people rioting and basically looting around the place. This is similar things in Hong Kong as well. A lot of I don't know about US and Britain. Here in UK, BBC doesn't show much of it. Always just say how bad the Chinese policeman is, the security law is, but they don't really show the rioting. Going to a shop, even you have the what you call the gate pulling down in front of the shop. They broke the gate going into the shop. They some of the place got looted out, more or less just get destroyed. Mostly who done it are youngsters. You call themselves if you call these also protesters, and I would totally disagree. Those are rioters, and the security law will come and calm down on it. I don't care what American government said or UK government said. Why don't they think if the whole same situation is happening in US and Hong Kong? Also, what is happening in Hong Kong is in US and also in UK. How would they feel? What would they do? They probably come into a lot of call these rioters, and they're no longer protesting. Look at the protests and stuff in Hong Kong. In UK, and what's happening now in US. It's just all this that there's always elements of people who are there to make troubles and basically overtaking the actual message of the peaceful protest, which is basically worry about the security law in Hong Kong. But this security law now comes in, and so people basically, the economy in general and stock market people think, okay, so irrespective you like the law or not, hopefully the economy gets stabilized, people can start go back to work, less of this destructive protest being happening slowly but surely. But it is sort of showing up in the Hang Seng Index, so it's slowly going up. So also remember, Hong Kong is a gateway into China. Either way, whatever US try to do to China, through removing certain special status in Hong Kong, American has been in Hong Kong for a long time, so it's other foreign countries, doing financial services and stuff, and. To them, they take making big money in Hong Kong every year. So I don't really believe personally that the US is going to kill them, because if they kill this market, well, this is one of the market that's been very lucrative for them, and also very lucrative for a lot of US companies. So I think all this rhetoric just have to. I don't think it would do anything to Hong Kong in general, the market in general. But however, it will slow things down, and this is why Hong Kong index hasn't moved up as much. It's quick like Dow Jones or Nasdaq, but it's still moving up sideways a bit, and gonna be sideways a bit, and gonna be. So it's a market for me anyway. Long term is worth to look into, but yeah, the market now is sort of showing short term, medium term is a buy, long term is neutral still. But yeah, watch on that one. Watch on that one. Nasdaq is next, just like Amazon and Apple, basically short, medium term, long term is a buy. This one continued to define the my belief basically, but I mean, with the economy this way in US and around the world, people go online a lot more. So technology company, especially with online presence, seems to have benefit from it. But the EU economy is not doing that well in US as well as around the world. So it's difficult to actually see how Nasdaq going to go up. But it does once it broke the 10,000 mark, and now it's 300 points above it. So it's just basically there to say this is a very good examples of trend following is supposed to be. Well, no matter what I think or what you think our biases are, or the fundamentals said, the price basically continue to move up, the index in this case. What you got to do? Are you just go to stick to your gun and continue to say fundamental is bad? I don't believe it. This is my analysis. This is my bias. Or you just go to flip and basically follow the price. And the price going up, why go stand on the side, not benefit from it? So as far as I'm concerned, yes, Nasdaq is a bit beyond belief. It might be bubble status, but it's going up. Just follow. So this is a good example of how trend following is supposed to work. So all short, medium term, long term is a buy for Nasdaq. Next is Nikkei, similar to US index. Again, Nikkei on short term, medium term, long term is also a buy as well. The economy over there, we was hopeful before the coronavirus hit with the Olympics actually happening over there, but it's now been delayed for 9 years. So, but it still sort of have I suppose a recovery story over there. So a lot of people going in there and then buying it up. So it's doing well. Next is silver. Short term now has changed to buy as well. Medium term is neutral. Long term is a buy. So silver being driven by the general economy. Is industrial material, so silver used as electric circuit board and stuff. So, but but also it's also a hedge against in the bad market kind of thing. So it's sort of like not as good as gold, but it's doing its thing but slowly. So this time at the moment, short term is a buy, medium term is neutral, long term is still a buy. That's good. Next is US dollar against Chinese yuan, Chinese dollar. Short term is still a sell. Medium term is neutral, long term is neutral. So on this one, irrespective of the weakness of the US dollar, but the Chinese yuan is also basically gaining strength, so to speak, in this case. So we just have to see how the US dollars weakens and then see how it goes with the Chinese yuan. But China is more exporting. It's not as much as back in 2007, 2008. 50% of its economy is based on exporters. But now it's more like 30%, but still hurts the economy. But we just basically wait and see. And also, like I said, similar to Hong Kong index, a lot of people would like to go into China, China index, and that's also one of the biggest market with the middle class, big amount of people in that segment, and everybody around the world want to sell into it. And obviously, yes, the U.S. trade issue with China is not going to help it. But if the Chinese dollars go too strong, of course that sort of slow down the economy as well. But we just have to wait and see how the trade deal is going to cause the movement on the Chinese yuan against U.S. dollar. Next is U.S. dollar against Japanese yen. It weakens a bit. So just like Nasdaq, you have basically see the Nasdaq going up more or less. Say the Japanese yen is weakened against U.S. dollar. So for U.S. dollar against Japanese yen, short term is a buy, medium term is neutral, long term is now changed to neutral as well. So which is good. So slowly basically showing Japanese yen is even weaker than the U.S. dollar, so to speak. which is not surprising. Quantitative easing, Japan has been doing that for the last decade, 20 years, probably 2 decades, and still not moving up much. But hopefully, the economy slowly recovers. But we just have to wait and see. Next is British pound against Japanese yen. So short term is a sell. Medium term is neutral. Long term is also neutral. Change from last week from sell to neutral for long term. So British pounds, this is going down at the moment. Basically, the economy start cutting up, and they still have worries, of course, trying to come out from the European Union. And it's basically we have to see how it goes. Next is British pound against the US dollar. Short term is a sell. Medium term is neutral. Long term again is neutral. Now changed from last week of sell to neutral this week for long term. So British pounds for both against both Japanese yen, US dollars weakening. Next is Bitcoin. This week now is changed short term now to a sell. Medium term is neutral. Long term is also changed to neutral. So all these people out there saying Bitcoin is supposed to break above 10,000 mark or doing a lot of moving up higher just like gold, but it sort of didn't do that. It's just gone sideways slowly, dying of a slow death, so to speak. So this week is going to sell. So we just have to wait and see if it actually break down or it's actually coming back up above it. We just have to wait and see. I don't really have a crystal ball about that one. Last but not least is the iShare 220 Plus, which is basically is the TOT ETF. Medium term, short term is a buy. Medium term is neutral. Long term is also neutral now. Changed from buy to neutral. Not last week. So that's basically the end of the update. But in general, basically say is about 4 weeks or so. 4 or 5 weeks or so. We have change of scenery. A lot of the shares or indices has been tracked by the sample portfolio is sort of moved, change side, and then now slowly everything settled down, and is basically all I see is a sea of buy at the moment. Quite a lot. There's a couple of sells and a couple of neutrals and stuff, but a lot of buying things going on. But we just have to wait and see what's actually happening. Who knows what's actually going to happen tomorrow, kind of things. But the next, basically, I think starting of next week or so now, US is going to start going to reporting season. I think next week or the week after, and we just basically have to see how bad the economy got hit the last 3 months. From March to June, so to speak. It's still is most under lockdown and start coming back up, and we just have to see how it goes and then how it might affect the market. So watch this space, and we'll talk to you next week. Bye for now.